Good evening, guys. How are you doing? Let me see. Let me double check. Are we actually live streaming? Are we live? Yes, we are. There you go. Hey, Lena Marie. Lena Mary, I think. Good evening. How are you? Good afternoon, guys. Or good evening. It depends on your time zone. So, a very green day today. If you guys want me to go over some stocks, please drop a comment down below. Let me know. And I want to tell you guys, I want to make a summary of what happened today in the markets. Green day across the board. Very nice rally we saw today. The Russell 2000 went up 3.17%. NASDAQ went up 3.43%. The Dow went up 1.86%, and the S&P 500 went up 2.65%. And obviously, the big question, the $1 million question as of now is, can this rally keep on going on throughout this week? That could be the case. I have a factor of concern that makes me believe that maybe this rally could be fading away throughout this week, and I will tell you guys what is that factor of concern about. So crude oil went down not much, only 0.15%. We had the Dixie, the US dollar going down to the 1.04%. And despite the fact that the Dixie took a sizable hit today, it didn't push crude oil higher. So we can make the case that we have recession concerns out there that are keeping crude oil lower, or that kept crude oil lower today. Gold and silver went up. Gold went up 0.34%. Silver went up 2.71%. You guys know that precious metals are inversely correlated relative to the US dollar. So the Dixie, or the US dollar, went down today, and that was the main reason why precious metals went up. And over here, you guys can see the concern that I am seeing on the table as of now, guys. The 10-year Treasury yield went up today 0.12%, and it closed the trading session well above 4%. This is very, but very concerning. I wanted to show you guys this chart. Some guys today in the main chat were asking me about the 10-year Treasury yield. So this is, for the most part, an index that tracks the 10-year Treasury yield. The ticker symbol would be TNX. T as in Trey, N as in Nancy, and X as in X. So take a look at this, guys. This is a weekly chart, and the 10-year Treasury yield, guys, hit a level today that we haven't seen since 2009. Unbelievable. Absolutely unbelievable. And I have told you guys on plenty occasions that the 10-year Treasury yield is inversely correlated relative to growth stocks, higher multiple stocks, and tech stocks. So what happens if the 10-year Treasury yield keeps on going higher? This is mainly sending a sign to the Fed that they have to be even more aggressive hiking rates, and this obviously is going to put downwards pressure from a mechanical standpoint. So if you guys are along the markets as of now, you'd better keep a close watch on the 10-year Treasury yield. We have a gap that could be potentially being filled in the upcoming days, up to 4.3%. This is a previous resistance back from 2008. Figure that. Go figure that. So if this gap happens to be filled, this is going to be very, but very negative for the market in general terms. However, on the flip side, we can make the case that if TNX happens to take out the support at around 4%, and if it happens to drop down to 3.74% ish, then this might imply that the markets are going to go higher. This would imply that we're about to see some sort of mechanical relief for the markets, but this is very, but very concerning. We had a massive green day today with the 10-year Treasury yield reaching a level that we haven't seen in something like 12 years. So very concerning from a mechanical standpoint. If we take a look at the sectors of markets, very, but very green day across the board. And take a look at these guys. I just told you, and I have told you on multiple occasions that the 10-year Treasury yield is inversely correlated to higher multiple stocks, tech-oriented stocks, and growth stocks. So guess what sector led the rally that we saw today? Consumer discretionary. This is the most expensive sectors of the markets from a multiple standpoint. So someone is lying over here, guys. It's either TNX or the 10-year Treasury yield, and it is about to go lower because the markets are about to see a sizable relief rally. So we might be entering into some sort of risk of mode for a couple of weeks or 3 weeks or who knows. Or the consumer discretionary sector is lying, and we are about to see another bump in the markets because this is a very heavy sector because inside the sector we have none other than Amazon and Tesla. These are the most important holdings inside a consumer discretionary. So someone is lying over here. The real estate sector went up today 3.73%. This was the second best performing sector, and the most important sectors of the markets went up a lot today, guys. Technology, the most important sector by a long shot, goes up 3.05%, and we also had healthcare going up 1.61%, and the financial sector is finally showing some signs of life. It went up 2.52%. Very strong day across the board when it comes to these sectors of the markets. And if we take a look at the advancers and decliners of today's trading session, very solid day to the upside. So today we saw 5,176 stocks, sorry, 5,176 stocks going higher and 1,453 stocks going lower. Usually, when we see these kind of exaggerated ratios to either the green or the red, the next day, usually in normal market conditions, we see the opposite happening. Let's see if this rally can keep on going on tomorrow. And remember, guys, this is going to be a very important week earnings wise. So tomorrow we have before open Goldman Sachs, Janssen and Janssen, Lockheed Martin, and after close we are going to have the most important earnings report so far, Netflix. What do you guys think is going to happen with Netflix, guys? Are you going to get puts or calls? Do you think that Netflix is going to miss on earnings? We also have United Airlines. I think that with the gasoline prices once again, or with oil prices once again going higher, this might be a candidate for puts. I don't advise gambling on earnings, guys. That's not my style. But anyhow, this might be a stock that which revenue and earnings might be negatively impacted by oil, by the fact that oil is once again going higher. We also have JB Hunt, a very important logistical company, posting earnings after close tomorrow and on Wednesday. Oh my God. Take a look at these guys. Tesla, my Tesla is going to be posting earnings after close. What do you think is going to happen with Tesla? I guess that I am going to go over Tesla stock throughout this live streaming. We also have Las Vegas Sands after close. We have IBM, Blend Research, and then on Thursday, guys, we are going to have arguably a very important report, Snapshot. And why Snapchat is very important for the markets? Well, because Snap is going to do affect in an indirect way both Google and Meta. So if Snapchat happens to miss on earnings in a very noticeable way, then we might see a negative effect um, uh, affecting both Google and Meta. So the report of Snap after close on Thursday is a report that, believe it or not, might be moving the markets into the trading session of Friday. By the way, guys, keep in mind that not today, on Friday. So this week we have options expiration. Remember, every third Friday of any month, of any given month, we have options expiration. So this Friday is going to be the third Friday of October, and let's say a trading session in which we see higher volatility than usual. So keep that in mind. We might see very wild swings on Friday because we have options expiration. So let me go back here, go back to Yahoo Finance. And for the most part, guys, what gave rise to the green day that we had today was once again the United Kingdom. So the United Kingdom new finance minister said earlier today, 2 or 3 hours before the trading session opened, that the United Kingdom is definitely not cutting taxes, and that pushed the British pound higher, and that put downwards pressure over the Dixie, over the U.S. dollar, and that's let's say from a mechanical standpoint, the main reason why we had a green day today. So we still need to keep a close watch on whatever is going on in the United Kingdom. You guys know that we have a very special situation over there with pension funds and hedge funds and stuff like that. So that is something that is also another factor that we need to monitor in real time. Keep in mind that we have so far 4 negative weeks out of, or we have seen 4 negative weeks out of the last 5 weeks in the market. So we can make the case that we are due for some sort of relief. And and this is something that I told you guys in my streaming last week. From a seasonality standpoint, the Bulls, let's say that get the ball from October 15th and on. So if seasonality happens to play out as it usually plays out, we might see, why not, a positive a close for 2022, despite the fact that this year has been very, but very tough. And when it comes to important economic reports, we don't have any very important reports until November, because on November 4th, I think, we are going to get the jobs report of October. But from now until November, we aren't going to get an economic report that is going to create a bunch of volatility. We're still going to be getting economic data here and there. But when it comes to very important economic reports, there's nothing important until November 4th. And remember that on November 2nd, we are going to have the next Federal Open Market Committee. So maybe if we don't have a bunch of economic data coming out from now until the end of this month, then that might be positive for the bulls, because for the most part, most of the economic data that we have gotten recently has been very, but very negative. So the bulls could benefit from the fact that we aren't going to have or get a lot of economic data in the next 2 weeks. Gio, hi Alvaro. Got me, a SPY call at the end of the trading at the end of the day. That's fine, man. I think that the rally is likely to keep on going on. The only thing that I am very concerned about, guys, is the 10-year Treasury yield. I am telling you, this is very concerning. If we take a look at the Dixie, the US dollar, it lost the support of 113 points, which is an important support. So if we have the combination of two factors, guys, the Dixie trading below 113 and maybe pulling back down to, I'm going to say 100, 108, but let's say that the Dixie pulls back down to 110 points, which happens to be a previous support back from 2001. So this is one factor that would benefit the bulls. And if we combine this factor, as I just told you guys, with the 10-year Treasury yield pulling back or pulling back down to 3.77%, I think that we have a first shot of seeing a continuation of the rally. So that's fine. You got calls. And mind you guys, full disclosure, as of now, you guys know that I have been shorting the markets left and right. At this moment, I do not own one single put. Not only one, zero, zero. I am not shorting the markets by any means. Zero. So no puts for me. I am bullish in the short term at least. So keep ready is going to get Netflix calls. So you think that Netflix is going to beat their earnings? I think that that guidance is going to be upbeat, guys, because Netflix, I think that they are rolling out a new tier that includes ads, and I guess that the company is going to state in the press conference that they are optimistic about this new tier of Netflix, and therefore they are going to say that this new tier is going to let him regain subscribers and stuff like that. So yeah, you know that in this earnings season, the most important factor is going to be commercial guidance or guidance, right? Isaac, besides TNX rising, if this week's earnings are good, is it safe to say a bear market rally has started? I don't think there are any other major catalysts coming up this month besides earnings. Correct, correct, Isaac. I just told you guys that we didn't have very important economic data coming out until November 2nd, when we are going to have when the next Federal Open Market Committee is going to be taking place. But other than that, we don't have very sensitive economic data coming out. So I think that might benefit the bulls because for the most part, most of the economic data that we have gotten recently has been very negative. So yeah, I do agree on that. I am bullish short term when it comes to the markets. Would it be wiser to buy a Netflix straddle? Yeah, that's a strategy that many people use into earnings. Yeah, that would be a an option. Badra Voda. So guys, what stocks do you want me to go over? Let me go over Tesla. By the way, I sold a put credit spread into the closing bell a bit before the closing bell, like 10 minutes before the closing bell. And I sold the put credit spread, guys, because since Tesla is going to post earnings on Wednesday, the implied volatility is very high. So if you buy calls or puts, you're going to be paying a very expensive price for those options. So I decided to sell the put and buy a put. And that's a bullish strategy. I think that Tesla has a fair chance of going higher after earnings. And I was the seller of a put that was more expensive relative to the put that I bought. So I took advantage of the implied volatility of Tesla. On top of that, I also sold covered calls today because you guys know that I am a long-term investor in Tesla. So I as of now I have three covered calls and I sold three put credit spreads. That's what I am doing with Tesla into the earnings report that comes out on Wednesday. In the case of Tesla, guys, we have an important spot that is coming up, $223. This might be an area in which we could be either shorting Tesla or we could be maybe starting a breakout trade on Tesla. If Tesla happens to take out $223 on good volume and momentum, then we have a gap that could be potentially being filled up to $231. $231 happens to be a previous support back from February, back from late February. So this could be, this is what I am thinking about Tesla. If Tesla happens to fill this gap up to $231, I might be closing the put credit spread that I sold today. And if Tesla fails at 220, $224 ish, then it could be pulling back down to 215 bucks, which happens to be a previous support back from early July. Take a look at the RSI of Tesla, 51 points on the 4-hour chart. That implies that Tesla is neither oversold nor overbought. And if you guys are buying calls, you have to be very careful. We are seeing over here a major downtrend. We can see a downward sloping 200-day moving average over here. So Tesla is trading as of now below all the moving averages, other than the 5-day moving average, which was reconquered today because Tesla closed at 219 bucks and the 5-day moving average is sitting at 215 bucks. So that is kind of positive, but this is still being a very ugly looking chart. So you have to be very careful because the sellers are in total control of this technical chart. Let me take a look at the market structure of Tesla. Take a look at the market structure of Tesla. This is not a good market structure, guys. So as you guys can see, over here, we have a very low demand and we have a supply that is falling, but it is still above the demand. Remember that the blue shaded area or the blue shaded region is the demand and the purple shaded region is the supply. So as of now, we can confirm that from a market structure standpoint, the sellers are in control of Tesla. And by the way, there is a rumor There is a rumor, a very strong rumor out there that states that Tesla might be announcing a buyback on Wednesday. If that were the case, if Tesla happens to announce a share buyback of $5 billion, $10 billion, that is going to be very good news for Tesla, guys. And by the way, they can do it. I was taking a look at the balance sheet of Tesla, and today they have $18 billion in cash and cash equivalents and a long-term debt of only $2 billion. So they could easily afford buying back, I don't know, $5 billion, $10 billion, and if that were the case, then that would be a very but very positive catalyst in the upcoming earnings report of Tesla. So keep that in mind, guys, because there is a very strong rumor out there. Can you discuss Ally for Wednesday's earnings? Yeah, sure. Let me take a look at Ally. Um, okay. By the way, guys, I worked with these guys. So this is a bank that is very heavily or let's put it this way, this is a bank that do a lot of business with car loans and medium and heavy duty trucks loans. I don't know. That is going to be a tough one because in the case of car sales, we know that they are coming down, and in the case of trucks, because I worked at Ross Truck Centers, guys, I was a salesperson, and for 2 years, so I was financing medium and heavy duty trucks with Ally. In the case of medium and heavy duty trucks, there is no inventory, guys. So if you want to buy right now a medium or a heavy duty truck, and if you go to a dealership, you're very likely to don't find anything on the ground available to in order to be sold. So I'm afraid about this report because these guys, as I just told you, do a lot of business with financing of trucks and cars. So that might be a headwind that they might be dealing with as of now. Very ugly looking chart, a clear downtrend, major downtrend. We can see over here a downward sloping 200-day moving average. Today, Ally was able to close the trading session slightly above $30. That is kind of positive because they managed to close above VWAP and they also close above the 5-day moving average and the 50 SMA on the 4-hour chart. The RSI is at 55 points, very healthy from a technical standpoint. Ally is neither oversold nor overbought. So if they happen to post a good report, they might be filling the next important gap up to $32.40, which happens to be a previous support back from July 13. But if they happen to miss, they might be taking out the lows at the 52-week low at $27.20 ish. So this is, I think that I am not telling any of you guys to buy puts, obviously, but I think that this would be a strong candidate for puts if I happen to be right when it comes to car sales and medium and heavy duty trucks sales. There you go. So I am not very optimistic when it comes to Ally. And what do you think about this bank? So would you share your strike? My strike about what, bro? About the put credit spreads or about the covered calls of Tesla? Okay, Ikem Bele Beledogu. Sorry, bro. I gotta be butchering your last name. My bad. I am short-term bullish, but long-term bearish. Yeah, same here, bro. Exactly the same. I feel the same way. I don't think that until inflation happens to decrease in a substantial way, the Fed is going to pause or stop hiking rates. So I think that in the absence of uh, uh, important or sensitive economic data in the next few weeks, I think that the bulls can take advantage of that situation and maybe rally at least until November 2nd, when we are going to have the Federal Open Market Committee. Tesla credit spread, sorry, didn't explain. Yeah, sure. Absolutely. This is the, let me see if I can pull it up here. There you go. This is the spread that I sold, guys. So I sold, let me see, I sold the $216 put. This spread expires in April. Yeah, right. Yeah, it expires in April. Yep. So April 21st. So I sold the $216 put, and I bought the $208 put, and I was credited $1,185 as of now. I am breaking even, as you guys can see over here. I have a I don't have neither a loss nor a gain, and I just took advantage of the volatility of Tesla, which is very high as of now because they post earnings on Wednesday. And this is a bullish spread, guys. So you sell a put with a higher strike relative to the put that you're buying. So the put you sell has a higher strike price relative to the put that you buy. Therefore, the put you sell is more expensive relative to the put that you're buying. So you enter the trade being credited a premium. So that's what I did. Yeah. So I think that since Tesla is way off the highs, let me pull up once again here the Tesla chart, guys. Since Tesla is way off the highs, I think that the reaction of the markets might be positive. I'm a bit concerned. Yeah, Tesla is 42% of the highs. I am a bit or very concerned about the about Forex. You guys know that the US dollar is at a almost it is almost at an all-time high. So that's obviously a big factor of concern for Tesla because an important a portion of the revenue that Tesla makes comes from abroad, and they are doing a lot of business in China. So that is something that might be affecting the revenue and the EPS of this company um, in this upcoming earnings report. So that is something that I am concerned about. But regardless of that, the markets have already priced in a bunch of bad news, and I gotta be uh, I gotta be clear, very clear here, guys. Despite the fact that Tesla is 42 or 43% of the highs, this is still being a very expensive stock multiple wise. Very, but very expensive. However, if the commercial guidance keeps on stating that Tesla is planning on growing at 100% year over year basis, then um, that might be an important factor for the stock of this company to go higher. And keep also in mind that the most important metric, if you are a long-term investor in Tesla, the most important metric that we need to keep a close watch on is the gross automotive margin. Tesla has the highest gross automotive margin in the industry, something like 30%, 31%. So that's another important metric that we need to keep a close watch on over here. Anytime, bro. Anytime. Yeah, absolutely. Okay. So do you guys want me to go over any other stock? Do you guys have any questions about what could be potentially happening throughout this week? So let me see. Yeah, speaking of Mrs. S, she's going to get Netflix calls. Do you guys think that Netflix can actually beat on earnings? Let me take a look at Netflix. By the way, they are posting earnings. Let me see. I am not touching Netflix by any stretch of the imagination. Good day for Netflix. Wow, it went on a tear today, guys. It went up 6.57% and it closed the trading session at $245.10. Very good day for Netflix. And we have a big resistance coming up for the stock of this company. I don't think, since this is a very important resistance, that Netflix is going to take it out before the earnings report of tomorrow, $253. This is going to be the most important task for the bulls of Netflix if this company happens to post a good report. So at 253, 254 bucks, the bulls already felt on one, two, three, four, five occasions before. So this is a big level. And if the bulls happen to take out 254 bucks, we are going to be in no man's land, guys. Take a look at this huge drop that we saw after this was April 20th. Yeah, after the second to last earnings report of Netflix. So what happens if Netflix takes out 254 bucks? How higher can Netflix go? Let me pull up here a 3-year chart. Yeah, we could be seeing 291 bucks, $290, $290 is a previous support back from mid-March. So the upside potential is there. If this company happens to post a very good, if they happen to post a better than expected report, we are looking at something like, yeah, 12 or 13%. But we can make the case that Netflix is trying to work out a bottom over here. The bulls have been able to hold the 100-day moving average as support, but we still have over here a downward slope in 200-day moving average. So I wouldn't trust this technical chart. We need to wait for the earnings report that comes out tomorrow, and obviously this is going to move the markets as a whole. If Netflix guys and Tesla happen to miss on earnings, and next week we have Amazon, we have Apple, we have Microsoft posting earnings, Meta. So if all of these very big tech stocks happen to disappoint on earnings, then uh, yeah, October might be ending up being another negative month for the market. So these big tech stocks have the ball for sure. So King, Bolo, Apple. Let me go ahead and take a look at Apple. All righty, let me see. Apple. I lost track of Apple today. It went up 2.91% and it closed the trading session at $142.41. And the bulls of Apple are about to make a test of a very important level, guys. 145 bucks. 145 bucks is a previous support back from mid-June, and this is also a previous support back from mid-July as well. So this might be an area in which, if Apple happens to fail, and you guys know that this is the most important stock by a long shot in the markets. So if the bulls of Apple cannot take out 145 bucks, this might be a short signal. We could be getting puts of either Apple or maybe the SPY, in which case we could see a drop down to $138. $138 is a previous support back from early May. But today, the bulls of Apple made some acceptable progress. So they reconquered the 5-day moving average. They held it as support, and they managed to close the trading session above the 50 SMA on the 4-hour chart. So yeah, this is the next important spot for them, $145. The RSI of Apple is sitting at 55 points on the 4-hour chart. So Apple is neither oversold nor overbought. However, this is still being an ugly looking chart. We are in a major downtrend. Apple is trading below the 200-day moving average, 100-day moving average. We can see over here a downward sloping 200-day moving average. So obviously, the sellers are still in control over here. But maybe if the bulls can take out $145, they could be filling another important gap up to $148, which happens to be a previous resistance back from mid-July. Let's see what happens with good old Apple. Let me take a look at the market structure of Apple. I didn't take a look at this market structure today. So what is it looking like? Let me see. Apple. There you go. And I just got an ESPN notification. So 3.4 out of 10 is the market structure sentiment. And yes, sellers are in control, guys. We have a supply that is above the demand by a sizable chunk. So, according to the market structure, the sellers are in control, which we can confirm taking a look at the technical chart. That implies that Apple is guilty until proven innocent, and therefore the stock of this company is likely to fail at 145 bucks. If that resistance happens to be taken out, then the study is going to start to look a bit better for the Apple bulls. Okay, Kid Williams, can you speak on Amazon? Snow did well today. What are strong resistance and support? Anytime, bro. Absolutely. That's what we are here for. So let me take a look at Amazon. Amazon went on an absolute tear on an absolute tear today, guys. I just told you that both Amazon and Tesla, which are the most important holdings inside consumer discretionary, went on a tear. So Amazon went up today 6.45% and it closed the trading session at $113.79. And the bulls are about to make a test of an important spot, guys. 115 bucks. Yeah, 115 bucks. 115 bucks is a previous support back from late July, and this is also a previous resistance back from mid-May. The RSI of Amazon is sitting at 54 points on the 4-hour chart, so this stock is neither oversold nor overbought. We are seeing, in general terms, a very healthy RSI condition on most of the most important stocks out there. So watch out for the bulls of Amazon. If they can take out 115 bucks in a successful way, we have a gap up to 118 bucks. This is a previous resistance back from late June. So if the bulls of Amazon were able to fill this gap, from 115 bucks ish up to 119 bucks. This would be a 3.42% trade. So that would be an excellent breakout trade to be taken. Um, but as I just told you, so don't count your chickens before they hatch. We have a major downtrend. We can see over here a downward slope in 200-day moving average. Amazon is also below the 100-day moving average, but the bulls made some progress today because they were able to close above the 5-day moving average. Let me go ahead and take a look at the market structure of Amazon. So, long story short, guys, we might see, I think that we have from a seasonality standpoint, we have a fair chance of seeing a couple of positive weeks in the market, but don't get too greedy, don't get too bullish because this is still being a bear market. And the 98% of the shorts that we are trying to take trades with as of now look very, but very ugly, and they are under the control of sellers. So you have to be very careful and try to place very tight stop losses. So the market structure of Amazon 4.4 out of 10. And as of now, we have a fall in demand that is above the supply. So, from a market structure standpoint, we can make the case that buyers are starting to step in over here. So this is a good sign for the bulls of Amazon in order to be able to take out 115 bucks and fill this next gap up to 118, 119 bucks ish approximately. There you go. So we have more requests. Micaela San Moore. There you go. Hi, Alba. What's up, Micaela? Your input on ENPH and FedEx. Hey, solar stocks got killed today. I was taking a look at first solar. I wanted to get puts, guys, but I didn't do it. I chicken out. Take a look at this. First solar went down today 4.12% and it closed the trading session at 118 bucks. This was a short, guys. The second first solar broke the support of 122 bucks. We should have gotten puts, but I didn't do it. I was very busy. I was live streaming for the members of my Patreon, and I didn't see it. But this was a short. So I'm thinking that if tomorrow we happen to see an unsuccessful test of 122 bucks, I am going to be getting puts of First Solar because I think that we are starting to see money migrating out of these solar stocks that went too far, too fast. Enphase Energy goes up today 1.86%, and it closed the trading session at $242.29. So check this out, guys. Enphase Energy, which is a very hot stock, very volatile stock, goes up today 1.86%. What is that saying? Enphase, guys, underperformed the S&P 500 today. Because the S&P went up today 2.65%. So this is a sign of weakness. This is a sign that maybe the time to short these kind of solar energy stocks is upon us. So we have a very important spot over here, right at the 100-day moving average, guys, $248. If Enphase happens to fail over this 100-day moving average, we could be getting puts in order to write them down to $234, which is a support that has acted as such on 3 occasions, or that acted as such on 3 occasions last week. However, on the flip side, if the Bulls can take out this 100-day moving average, then they might get excited and maybe they could be filling another important gap up to $260, which is an area in which Enphase also failed on multiple occasions in the most recent weeks. So in the case of Enphase, my plan is very clear, guys. $248 is a very critical spot. If the bulls fail at 248 bucks, let's grab some puts. If they are able to take out this 100-day moving average, then there is room to the upside up to $260 approximately. The RSI is sitting at 41 points. This is another stock that is neither oversold nor overbought. So strong candidate for puts, at least from where I sit. So there you go, Leslie Williams. What's up, Leslie? How are you? Snapshot. The snapshot is going to move the markets, guys, on Thursday. How about that, huh? This is a 20 billion market cap stock, guys, that moved the market. This is crazy. Unbelievable. So Snap goes up today 6% and it closed the trading session at $10.59. So Snap is trying to work out a bottom here, guys. Is it going to be able to work it out? Did the Snap actually bottom out? We will find out on Thursday once the earnings report comes out. If the report comes out better than expected, we have two gaps to the upside. The first one, $13. This is a big level for Snapshot, guys. This is a previous resistance back from early September, and this is also a previous resistance back from mid-August. Or this is the first gap. And rather, if the report happens to be a blockbuster report and stuff like that, I don't think that is going to be the case. Then we have a second gap up to 16 bucks. This is a previous resistance back from early June. If the report happens to come out worse than expected, then watch out for $9. Maybe a Snap could be going lower than this. I personally don't see a Snap going lower than $9. But this is another very ugly looking short. You have to be aware of that. We are seeing a major downtrend. We have a downward sloping 200-day moving average. We also have a downward sloping 100, sorry, uh, downward sloping 200-day moving average, downward sloping 100-day moving average. So maybe Snapshot is already leaving the worst behind. But this stock is guilty until proven innocent, and we need to wait for the earnings report on Thursday. Let me go ahead and take a look at the market structure of Snapshot. Are buyers stepping in here? Is that the case? Because this stock went up today 6%, but we had a massive rally. So let's take a look, guys. So we have some buyers showing up. The market structure sentiment of Snapshot is 7.2 out of 10. And as of now, we have a decline in demand, but that is still way above the supply. So maybe this is a sign that Snapchat maybe can take out tomorrow the 180 SMA on the 4-hour chart near 11 bucks. Maybe this stock can fill this gap up to 13 bucks once and for all before the earnings report. That could be the case. I don't think that Snapchat is going to go anywhere before the earnings report comes out on Thursday. Thank you. I'm swell, Leslie says. There you go. Okay, let's wrap it up with FedEx, guys. I haven't taken a look at FedEx in quite a while. Let me take a look at FedEx before I wrap it up. So FDX, there you go. FedEx. There you go. So, sorry, guys. So there you go. I lost my voice for 1 second. So this dip was bought, guys. This dip at $141 got bought up. So this is a good sign. As of now, we have a semi-ascending 5-day moving average. The 50 SMA on the 4-hour chart is acting as support for FedEx over here. RSI is sitting at $54. So I would like to see a process of consolidation slightly above the 5-day moving average, slightly above $156. This might be a sign that the bulls are gathering momentum in order to fill the next important gap up to $170. I am going to put FedEx on a sticky note. I'm going to be keeping a close watch on FedEx tomorrow and take a look at how important, guys, this gap up to $170 is. So $170 happens to be a resistance in which FedEx felt on multiple occasions back in 2019 and also back in 2020. So this is going to be a big level for FedEx. So I'm thinking, guys, that since FedEx is a very important member of the transport sector, that if we actually happen to see relief, the continuation of this relief rally, or if October happens to finally, or if October ends up being finally a positive month for the markets, I think that FedEx has a first shot of filling this gap up to $170. If we happen to pick up calls or shares of FedEx slightly above the 5-day moving average, slightly above $156, $157, and if we happen to be able to write them up to $170, this would be an 8% profit trade. So major downtrend. We also can see over here a downward sloping 200-day moving average, downward sloping 100-day moving average, but we have a semi-ascending 5-day moving average, and the 50 SMA on the 4-hour chart is acting as support. So yes, this is an ugly looking chart, but it is starting to show some signs of life. Let me take a look at the market structure of FedEx, and thanks for bringing it up. I didn't have it on my watch list, and I am going to put it on my watch list right away. So 6 out of 10 would be the market structure sentiment. We have a fall in demand, but that is above the supply. So yeah, definitely from a market structure standpoint, buyers showed up, and they might be able, if we see a continuation of the rally that we saw today, maybe the bulls might be able to take FedEx up to $170 per share. So let me see. We are already, hold on, we are already 44 minutes in, guys. So I am going to wrap it up. Thank you very much. Remember that I am going to be live streaming for you guys once again with Mario on Thursday at around this time, 4:40, 4:50 p.m. So don't miss it out. Build your own empire. I know NNDM is nothing to look at, but what do you think? Um, Though that's a higher multiple stock. And as of now, the markets are in risk of mode because we have recession fears, the Fed is hiking rates. So if you happen to own Nano Dimension shares, I think that this company might not go under. This is a company from Israel. But yeah, $2.43. You gotta be patient, bro. Very ugly looking chart. This is a penny stock, so this is not a good time from an economic cycle standpoint to buy Nano Dimension. If you did your research work, if you like the company, if you like the technology that this company is working on, you can hold your shares and hope for the best. Hope is not a trading strategy, and it isn't an investment strategy either. But I think that this company is going to survive. Many companies won't be able to survive. The new situation that we have worldwide with central banks hiking rates, and with a worldwide very tight monetary policy, I think that this company is going to be a survivor, hopefully. So, you know, um, I think it is a great investment, but thank you, boss. It's not understand. It's not, I understand. Yeah. Um, Guys, this is not this is not a good moment to buy speculative stocks, pre-revenue stocks, pre-earning stocks. This is not the moment. Okay, the markets are in an absolute risk of mode, and any stock that is in a pre-revenue phase, a pre-earnings phase, and stuff like that is going to be under a lot of pressure until we see the Federal Reserve, sorry, making a pass or maybe dropping rates. Until then, these stocks are going to remain, are really likely to remain under a lot of pressure. So thank you very much, guys, for joining me today. It's a pleasure. I really have fun live streaming for you. And remember that I am going to be on Thursday with Mario. Okay, live streaming for you guys once again. So take care. Enjoy the rest of your day and see you in Discord. Bye. Take care, guys. Thank you very much for joining me. Take care.